Yo, what's up, guys? Wanted to review the New Zealand dollar pair and what I'm looking at, what I'm expecting actually on the New Zealand dollar. So I remove the watermark. I remove the watermark here, and this is a position that was taken on last week. As we expected that once we mitigate this level, once we mitigate this level, expecting the price to go higher and return. So according to this level, I'm still expecting higher moves to the upside. But before that, actually, maybe we're going to go back around this area here. We're likely to come back here before we go up. And let me explain why I think of before we just go up, we're going to get the push to the downside before we go to the upside again. So I think let me first review the fundamental part of it. Are we still having the same bias or not? So I'll have to go to the New Zealand dollar, look at the fundamentals first. Not New Zealand dollar, the New Zealand dollar. So we'll go to the weekly time frame and have our bias there. So in the New Zealand dollar, we'll look at just be very quick. I'll not look at a lot of data. Just be very quick. I want to say retailers are still selling and they've been bearish up to around uh, up to 2023 June. So they are cumulatively very, very bearish, which means that we're going to get a push to the upside. And again, I'll just do this here very quick. Then look at the non-commercials. Also, they're bearish, as you can see, very, very bearish, very, very bearish, very, very, very bearish. First, let me see this. These guys are very, very bearish. Let me see, up to when? Up to 2019, these guys have been very, very bearish. So this one is very nice. We're going to get a pump to the upside. And let's see the smart money. I want to look at the smart money. And when I look at this, we want to look at the positions. You can see they are very, very, very bullish. If you look back, they're way back. Let's see how long they've been bullish up to around 2019 as well. So this a sure bet that we're going to get this turn push to the upside. So I look at the index, and on the index, I want to see what the commercials are doing, and you can see they are very, very bullish. While the retailers are still on this downtrend. This still looking for sales position there. Trend followers, and it's not wrong, but sometimes the trend is not your friend. So this one will just look back shortly for longest period of time, which is around 3 years. And looking back how they've been positioning themselves in the last 3 years, this just very nice. You can see that these guys are still bearish, and you can expect that pump to the upside. And this pump is obvious, as you can see from here. Let me do this. You can see here when they're bullish, expecting to get that push to the upside, but we don't know when. But actually, this week we're going to get that buy to the upside for New Zealand dollar, but I don't know when. So look at this. The last time got that, and the price went higher, and again here went higher. Look at the blue. These are the smart money. So every time they are up here, you get that push to the upside. Every time they were up here, you get that push to the upside. So that's what you can see, that this is what happens. So let's look at something else. So let's look at the valuation of the dollar as well versus the New Zealand. So the dollar, actually the dollar index is used to measure the value of other currency, 6 pairs. So you look at the value of the dollar. And here, look at this. Mine is not go to short term. Because we are undervalued here. And according to this valuation, we expect to get a buy to the upside. And it may say around 30, where do we get long-term valuation? On long-term valuation, we see that we're still undervalued, and you know that the moment you're undervalued, you always get that buy here, get that buy here. There was that buy. Every time you are undervalued, you should always get that push to the upside, like here, with that push, and probably, yeah, right. So this means that we're going to get the push to the upside, but don't know when. So let's try to look at the New Zealand dollar in terms of technicals. First, let us look at the dollar as well. The dollar as well. And I was looking at this dollar already earlier, and according to what I saw here on this dollar, let me first. Now, these are the technicals here. So let's analyze the dollar technically before we make a decision on our New Zealand. So look at the future. This is a future of the US dollar. And what we can see here, I just pick it from where I can see. Just pick it from here. This one, you see, took out the inducement. This inducement that was taken out. Low, lower high, breakout structure. Boss, again, there's a minor inducement here. Inducement is here. This is a lower low. Price break this structure. Boss. Yeah. Then there's another inducement here. And you know why I'm choosing this level? Because the first pullback before the price break the structure, these are inducement. Again here, price creates a pullback before breaks the structure like this. These are inducement. And if the price fails to take out this level and violate that high, that's when you get our change of character. So you can see these are protected by here. Now, if you close above this zone, the candle, yeah, with the body, that is a shift in the market structure, change of character, and we know that the price will be going to the upside. Price will be going to the upside, and again, you need inducement. Look at this. This is a high, low here, first pullback, minor internal pullbacks here. Price takes out this level, but if it takes out this one, this is the best one. This is a major inducement, but anyway, price went higher. So we can follow what the price did before and higher. Look at the last pullback there. This is the inducement, high, low, breaks the structure. But here there's always what we call understanding the market structure, regardless of what you're doing. Look at this structure. If we look at this market structure from this low, right, it went higher, came down, went higher, came down. Still, this is my major inducement. Here we can get a change of character, which is just a short-term understanding of the market pushing towards the major inducement. And price went away. You can see all of these pullbacks here, sort of the upside there. So you can see this is a standard inducement. Will mark this level as a standard inducement, but these are major inducement. Only this one's the one will give me a change of character here. So that's how I look at the market structure. So for me, this will not be the normal inducement is here, the one that you're used to, right? The one that you're used to is the normal inducement. But for me, I'll not look at this as an inducement because I'm looking at this structure as something like this and price went away. So this pullback This low must be taken out for price to go higher again. I'll remove this one and this one after understanding the whole structure here like that. All right, and I'll look at this one as my standard inducement. Standard inducement, and this is my high, and my major inducement is here. This is my major inducement. I want to see if this low is taken out, the better, so that I buy to the upside. But if it takes out this one as well and try to mitigate either some zones here, no problem. So let's see what happened here. Price came here and took out all of them and even took out the major inducement. There, the major inducement, and decided to close below this zone. So this tells me that the price has shifted to the downside, and this is when I get my monthly change of character. Yeah. So once I get this monthly change of character, where do I have my inducement again? Look at this. Minor pullback, then bigger pullback. See that? Small pullback. So this is my normal inducement. This is my major inducement. When the price takes out this level, then I prepare to look for sell again. So this is my major inducement here. Is it major inducement? Yes, major inducement. Yeah, and this is my lower low. But here, this is my what you call engineering liquidity, right? Price to go down properly, it needs to clear that liquidity and probably mitigate what we call, what do you call here? Order flow. Last, look at this. There's something here you need to see. Push higher, pull back, higher, pull back, higher, then massive drop. So what are we learning from this? This was our order flow first, earlier order flow. This was our order flow here. Our major order flows here. So you can see this is the order flow and see it's mitigated. Then we have another order flow here. That is not mitigated. So we can see here, and within this order flow, we can find our extreme POI, like a supply zone there. Yeah. So you can see these are the levels we'll be looking at. But let's see our order flow. Let's see. The order flow is mitigated. This order flow, as you can see, it's now mitigated. And once it's mitigated, we expect the price to go higher. Expect the market to go to the upside. I mean, to go to the downside. And once it goes to the downside, that's when we'll get our push to the downside. So we are waiting for stronger confirmation that the moment we get to either mitigate our supply zone, let's see, our supply zone is here, right? Supply zone is here at the extreme. So I've mitigated this order flow and price playing around here. So sometime price will mitigate an order flow. And for example, look at this market structure. That's when the higher, down, down, and when higher price can come down, take out this major low here until go back and mitigate the order, the supply zone before the rally to the downside. So because we are here, this way we are, this way we'll focus the most, right? So price has mitigated the supply zone there. I mean the order flow from the left, our order flow there is mitigated. Now, and I say that the order flow is the last buy before the sell. And what we can see here is that the price is trying to rally to the upside. Maybe price can be heading towards the supply. Who knows? But remember, this is a monthly time frame. So let's go to the weekly and be able to see this market structure properly. This is our monthly supply. And on the weekly time frame, let's look at this market structure from the previous structure so that you can be able to follow. We can see that previously, price took out our major inducement here. Is your high, all right? And is this our high? No, this is our high here. This is not the highest point. After price took out the major inducement, this is our major inducement. And if price breaks this high, the upside, we have our new record structure. After taking out the major inducement, why am I taking this point as the highest point? Because price took out this level and went to the downside, but the high that was created is this one. So this is the highest point and not this one. This means that in terms of inducement, also you're going to shift the market structure because inducement must be the low that generated the highest point. But here, this low generating this high, the price went above it and swept that particular high. See, if I do this here, we're going to see that we have our price has taken out that high, right? This high has been taken out like that. So this means that according to this market structure, the main inducement is not on that particular high, not here, but look at this structure here. From this low, the first pullback, the minor here, we've been having some smaller pullbacks here and there. The price went higher. We have to take out all this accumulation. So a major inducement, we'll have to shift it up to here. Inducement taken out at the high, price broke the structure. Price breaks the structure to the upside. These are our low here. And once we have our high low here, then we'll need a new inducement to the upside because the market structure is pushing higher. And again, you can see according to this structure, our next inducement is here. This, in fact, is a major inducement. Inducement taken out, that's our high here. Price takes out this level, and price is trying to do what? To go higher again. So since that we have our mind that we expect this price to rally to the downside, we expect the dollar to fall so that we can buy the New Zealand dollar. Then what do we do here? We can look at this market structure in a different way. Look at this market, price went lower. First small pullback here, took out that inducement, created a new one, took out this one, all these lows here, and price has failed to do what? Price has failed to do what? To go the downside, but went lower, took out this opposite major inducement, and we're trying to do what? To go higher. This means that we need a supply zone, either this one or something here for us to go to the downside. So the only thing I see here, according to this market structure, for us to go to the downside, it needs a major inducement, the low that, the high that generated the low, this is the high that generated this low. This here is your major inducement. But if we look at this, where did the pullback start from here, 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 and here? We'll go for this one as our major downside inducement. So here, this will be our major inducement here. Press us to take out this particular inducement. Okay, press us to take out that level, taken out, then this is our low is here. But price seems it doesn't want to go down just from the inducement point of view. It needs what? It needs what you call a supply zone. So a supply zone from this extreme, before we go to our major supply to the upside, here we have a structure here. And look at this, have this low accumulation of this zone. and this particular high. So this is a zone that I'll want to see the price walking into this level before giving us a good major drop to the downside. So what do we have here? We can look, let me change the color of this lines. Now we're here, so we can narrow down to the daily time frame and try to refine these weekly levels. Let's see here. So you can see when you come here on the weekly level, you see you have two levels here. Have two levels of interest. We have this one, extreme supply. Now, once you have this extreme supply zone, then give it a green color. Then we have a drop. There's a base drop. So we have rally, base drop, base drop. So we have another level here. Okay, those are the two areas we'll be watching. So after price has taken out this liquidity, according to on the dollar index, after taking out this level, you can see price, what it did, like still has intention to go higher, pullback. When the higher came down, took out a pullback, and you can see we're attempting again to go to the upside. So here again, we are likely to see this price do two things here. First, look at this here. Have a short-term break of structure there. And if you have a break of structure here, on a bigger picture, we know that we're expecting to do what? To at least step into this supply before we get a drop. Expecting to enter into this particular supply zone here before and then move to the downside. That's on a higher time frame perspective. Or go to the upper one. Let me, this one have two lines that look alike. I want them to look a little bit different. This supply zone, I want them to look a little bit different. Okay, so we have those two areas. From a weekly point of view, if you got this like that on the weekly, this is what you get to see. You have this one and the one at extreme, but this one is the immediate, this one is of high probability, this one, then this one. Yeah. So the price has taken out all the liquidity and you might see it go down from here or just go to the upside there. So what do we do here? We can go to daily, try to look at this structure properly. You can see on daily, we have you can see on daily structure, price still looks bullish on the dollar. The dollar still looks bullish and it has taken out what we call the major inducement there. And it has not given us any sign of change of character or anything that looks like it's attempting to change the direction. We see after taking out this inducement, what do we have? This is our high, this is our high low, and price is there. So where's the next inducement? From here, back there. So it can decide to come down to take out this inducement before going to the upside as well. This is another probability that we might have on this dollar index. Yeah. So if that is the idea on the dollar index, what do you say? Let's go to the 4 hours time frame, narrow down a little bit more. So you can see on the dollar index, these are pullback that we have here. You can see it's a major pullback that's supposed to be taken out. But here, I don't see the dollar trying to come down for this back. All right, so we need to take out this level before going to the upside. So I'll go to 1 hour time frame, try to see what we have here. So you can see on 1 hour time frame, again, price has just taken out its major inducement on 1 hour. That take out this level and it's attempting to go higher. But I don't think if this is going to hold, but the market will always do anything. So still playing around. I don't see any inducement here. I don't see any inducement here. So let me look at the 30 minutes structure. So for this market to go down properly, then it will need another inducement on the other side, which is, let's see here, up, down, up. This isn't even a good pullback, but anyway, here, down. So for price to go down properly, at least let's take out this level to mitigate this particular supply, then a rally to the downside. There's a supply zone here. Right there. So we'll look at the dollar, but I, for myself, personally, I think we should go higher before coming to the downside. Look at this. And there's another problem here. There's a gap here. If you look very well, when the opening of this particular candle, there's a lot to learn from this. You know very well that how does the market opens? The down close candles, they close below, right? They're open above and they close below. This means that there's a gap here between the opening of this candle from here to here. There's a gap there. If you know the opening and how the market opens and closes, you realize that this candle was supposed to open down here, not where it has opened there. This means that on a different time frame, you might have a gap, but sometimes these gaps are not visible on lower time frames. They're only visible on higher time frames. I see here, this is a gap that we have. Price just came back and mitigated the level and is trying to go higher. So that is another thing that you're learning from this. And let's look at the New Zealand dollar as well. What do we expect? So already I did some analysis here already, but let me use a different broker so that I don't mess up with my analysis. Use a different broker, and here I will delete everything here so that we can just start a top-down analysis on the New Zealand now dollar here. That was the, let's go to the monthly time frame for a quick start. So look at this New Zealand dollar. You can see what we're learning from this, that it was pushing higher. And look at this. First pullback, another pullback, went higher, another one here, went away. All these, the beginnings from this, our major inducement taken out. The major inducement, yeah. And this is our high, low. Record structure here. Boss. Now look at this. Again, high. This is our major inducement. This is our standard inducement. So this inducement must be taken out for us to buy the upside. Major inducement taken out. This is our high here. Then you can see the first level, because of imbalance, this could be your first demand on a monthly time frame. And let's look at this on the weekly. Let's look at this on the weekly time frame. Now you can see according to the weekly time frame, our extreme demand is here. So our demand zone, so let's go back to the monthly. Let's go back to the monthly time frame. So you can see according to the monthly time frame, This level is mitigated and price attempted to go higher and again fail. So we're attempting this means that this is the only level that's pending here. This is where we are going at long last. So this is a level that's not mitigated. So these are extreme monthly demand zone that is here. It's not mitigated. And according to this market structure, we can properly see that this is a level that is here. So I'll do this and I go to the weekly time frame and I want to see the structure, how the price is approaching that level. Because on a monthly time frame, what we are seeing here is that the price is the market just attempting to do what? To go lower towards this level before we get that rally to the upside big time. But short time, remember the market has what we call impulsive and impulsive moves. So according to the weekly time frame, we can see the market pull back, went higher. These are inducement taken out, for example, here. Inducement taken out, lower low, and price, when it goes to the downside and breaks this level, we mark our high. Record structure there. So these are protected high here, and look at this structure again. And look at this one, market started doing this, low, high. Some internal, I'm skipping small pullbacks, high, low, because it's a low, from this low, high, this internal one, the low, high, the low. Standard inducement, major inducement there. So let's identify these levels properly. Standard inducement is here. The major inducement is here. Right, so once that's at that level, then this is our low low. Yeah, and if we get to break this structure here again, here, then we'll expect the price to go higher according to the weekly time frame. These are lowest low that has to be broken. But as well as you can see within this level, we still have what we call major inducement. Look at this minor inducement, price takes out the inducement, pullback, price takes out the inducement, pullback, price takes out the inducement, and this is a low that has to be broken according to this structure here. This means that according to this structure, let me go to daily for you to see it properly. Yeah, this is what I'm saying. So taking out this major inducement here, major inducement here, was it here? This was your low, that the price is supposed to come and break this internal structure. Wow, very long, very, very far. Yeah. This one I'll just mark it as a straight line, the red color. It has to be broken out. So if the price has to break this level and this one, what I mean is this price has to do this, break this level before going high, take out either this inducement or this one, then drop to this one, then something like this, and push to the upside. So you can only see this. Now we can see that if you look at this market according to daily market structure, we can still see the drop from this particular high where the market took out the major inducement. You can see the roots are the same. Price break the structure there. And inducement is here. Inducement is here, and this is your lower low. Let me zoom in a little bit more for clarity. Lower low here. Now look at this market. Price went lower, broke the structure there. Both, and there's a small issue here. Look at this internal structure, price went higher. There's no pullback here. All of these are inside this huge candle. So this is just something like this. Then this means that this is your major inducement here. So this inducement is here. And this breakout structure is here and here. So this is just one leg of a market, something like this. You see, this, yeah, price takes at this level and a push to the downside. So we have, again, look at this market structure. Then when market break the structure, this is your protected high. Now, what are we seeing here? Price. Sorry. What are we seeing here? Price created this low, high, small pullback here, here, and here, and here. Normal inducement, major inducement. But you don't have to mark everything as an inducement. You can just call this one our inducement. Then this is our engineering liquidity here. Now, price takes at that level. This is our lowest low. Now, this means that we have again to break this level to the downside. If we're intending to keep going down, this level must be broken like that, boss. And where's the protected high? The protected high is this one. Yeah. So this means that the market here looks like this. Low, high, downside there. So again, here we need an inducement to be taken out for us to continue selling. Look at this market structure. Here, first pullback, minor. This one took out this level and went down. So these are our standard inducement. Our major inducement is there. So we'll still see that we are going to get this is our inducement that I want us to see it being taken out. And this inducement, the reason I'll want to see this inducement taken out, sorry, this level, the reason I want to see this level being taken out, look at this. Price already took out this high. There. We already took out that particular high. So if this high was already taken out, then this means that our inducement has shifted to this particular high here. These are new inducement, right? So, and our major inducement is just up here. And this means that our supply, if we want to sell, supply zone is up somewhere here. There. So we expect this price to go higher. Take out one of these levels, right? Take out one of these levels before the massive drop. So here we can try to look at a reason why we can hold ourselves to buy somewhere. Let's look at on the left. And on the left-hand side, use the weekly time frame to see if I can find something that look like a support point. So I got this weekly time frame. If I'm looking for a reason to buy, then I'll mark the body of this candle. Here, and the low of it, which is here. So this is my area of interest for a reason to buy. If my bias is that I want to be bullish, this is the first place, right? This is the first place I want to see. Price coming back to price tapping here, and I should buy from here. Let's look at the future of the New Zealand dollar. We see if it has the same level. Yeah, it's here. The same level is there. And the price is almost there. So when you go to the daily time frame, we expect that New Zealand to start giving us a sign of trying to go higher. Mhm. So let's, after tapping here, let's go to a lower time frame as 1 hour. And here, remember our previous market structure, it's not clear. I think it was very clear on 15. And you see that on 15, price took out this particular inducement. That was last week. And price created internal structure, which is here, here. And if you check my previous video, I said that if the price takes out this level, you can attempt to buy. So taking out our major inducement here. Our major inducement is here. And price came to mitigate this particular structure here, which is a demand zone here. Now, if the price came here and again, you can see after breaking that particular structure there, boss. Now, what's the inducement again? According to me, price created this pullback, this one, minor structures here. It has to take out all of these lows here for me to position myself somewhere. So to me, this is also another liquidity that I don't want to see it being taken out as my major 15 minutes major inducement there. And down here, I have a very, very nice demand zone. It's a very, very nice demand zone that if the price comes back here, then that's the only place I'll want to attempt, not even actually like to attempt to put my small position in because the dollar is not clear. Yeah. See, so I'll have my notification on. Put on my notification bell so that I don't miss that. And that zone, if price comes here, I'll be able to get to see it. So this I'll wait for it. And I'll not try I'm not going to attempt to buy where it is right now because the location of that zone, my protected low is here. So when I'm looking at the location of the zone between this swing low and this swing high, I see the market's on premium and I want to get it on discount. So I'll stay away until my level is okay. So that is it, guys. So I hope I'll see you in my next video. You can drop your comment, questions, and also subscribe and share this video. I'll see you soon on my next video. So let's see how the week will play out. Otherwise, all this is just probabilities and my point of view. So the market can either follow or it cannot follow. So at the end of the day, it's just a speculation, right? So otherwise, guys, have a good week ahead.